Sometimes the choice looks like the market is provoking you on purpose. So the price shoots up, so you're afraid to buy. It drops down, you're afraid to sell. The envelope is a simple tool that helps you to see the boundaries of normal movement around the average price. So guys, today we'll break down how to read envelope calmly. So what the boundaries mean, how they help identify overbought or oversold conditions, and why it should not be treated as a buy or a sell button. Envelope in technical analysis is the upper and lower lines that are built around the price to show when the price has moved too far from its unusual range. Most often, these are moving average envelopes. In the center, there is a moving average SMA or EMA, and above and below, there are boundaries at a fixed distance from it. So guys, the idea is pretty simple. Most of the time, the price moves within these boundaries, and moves outside them are moments of increased attention. The mechanics of envelope are very easy to understand. It's really, you set the middle line and you set the width, how far the boundaries will be from the average. And then the indicator helps interpret the market through the idea of mean reversion. So when the price touches the upper boundary, the market is often considered overheated. Next, when it touches the lower one, oversold. But it's important, this doesn't guarantee an immediate reversal, so the price can remain overheated for quite a long time. So the width of envelope is the key here. So if the market is volatile, the boundaries should be wider. Otherwise, there will be many false signals. And if the market is calm, the boundaries can be narrower. So otherwise, there will be too few signals. In other words, the goal is that under normal conditions, the price mostly stays inside the indicator, and moves outside it are noticeable and not too frequent. The classic signal logic looks like this. So the price reaches the upper boundary. Next, so this is an overheated zone, and traders often look for a selling opportunity based on the idea of returning to the mean. The second, so the price reaches the lower boundary, an oversold area, where traders often look for longs, but it is more correct to treat envelope as an attention signal rather than a ready trade. So it's better to wait for the price reaction, otherwise you can end up in a situation where the market rides along the boundary for a long time. Envelope is better used together with other tools, because the market can stay overbought or oversold for a long time, and one envelope doesn't have to catch the exact reversal. Patterns or structure on the chart, next volumes, as a clue to the strength of the movement, and any additional indicators that help you understand whether this is a real reversal or just a strong trend. This is a really important part, guys, so hear me out. So this is a tool based on a moving average, which means it has lag. Next, envelope that is too narrow gives many false signals. An envelope that is too wide almost gives no signals and can be impractical. So therefore, the key to proper work is to adjust the width to the market and use envelope as context plus confirmation. In short, envelope helps you see when the price has moved too far from its average and where the probability of returning to normal increases, but it doesn't work as a signal. So the best approach is market structure and touch or break of the boundary and confirmation and decision. So guys, now let's move on to the practice, and I'm gonna show you how boundary touches and confirmation work. So I'm gonna open several trades and we will analyze everything live. So we are starting trading using our indicator, and we continue on the daily market. And guys, I already recorded the practical part for 2 videos, so to speak, and today we have a good market for this, despite all the political events, and even though today's Friday, the daily market is showing excellent volatility, so we continue trading. And as usual, I'm gonna trade with a 3-minute expiration time, and I conduct the initial market analysis on the 1-minute time frame. The position will be open for $50, and now let's select our indicator. Here it is. And first, let's change the visualization, of our indicator. We'll make the moving average in the center the yellow color, the moving average below red, and let's make the background with blue color. So now let's look at the movement according to this indicator. And guys, as you know, the price generally shouldn't just move outside the outer parts. And just right now we see that the price on almost all charts is moving into the outer area, but this will not continue because we're changing the settings. And immediately we set the period to 20 exponential moving average. For now we just press save. And let's look at our indicator again. So we see that how it's going up. So we see that frequent breakouts are still happening. And we will change the deviations. And we increase the deviation by 1 and look at our movement dynamics. As you understand, when the price reaches the upper boundary, these are some of the key points there. And there is either overextension or overbought conditions in the movement gap. This is what we focus on most of our attention. Now the picture is much better. The price is almost entirely inside the movement range except for some assets. And now let's increase the deviation once again and take a look. I think, guys, we will stop at this version of the settings. So let me just show you this indicator settings once again. And now finally, let's move on to trading. I'll also definitely use technical analysis as well, and I'm going to explain the trade in detail. And guys, let me remind you again. No, this indicator is not an indicator for an exact entry, so technical analysis is necessary here as well. So as soon as I find a suitable movement or suitable trade, I'll return to you. And for now, I'm starting the analysis. And let's stop on this currency pair. This is the United States dollar against the Canadian dollar, and with a period. So we're in new candle, we're gonna open the sell trades because our indicator shows a small overextension in the upward movement, and it makes sense just for open and trade downward. Good volatility I see, and a strong candle dynamics, and the price is moving right now. Well, I'm just opening the position, and right now the price is moving within the red rectangle area. This is the resistance area, and we can call it that because earlier we saw that the price was trading here and we observed many pullbacks downward, just followed by a breakout and the price moving lower. This is not very strong resistance area, but for this trend it still exists because earlier we had strong upward dynamics and the price was moving higher. And of course, I did not analyze this on a larger time frame, but overall, we see that this is an excellent entry point. I was not mistaken. And these kinds of impulses were recorded here, and after such strong movements on the pair, we see that the trend moving downward. So for quite a long time it was moving down, and then he will see such a pullback in the dynamics and also impulsive candles with large bodies almost without pullbacks, and there were only 3 pullbacks here, and the trend continued moving downward. And on the 5-minute time frame, we see our overextension. Let me highlight it in more detail. Now, here the price didn't move above the upper boundary and pulled back downward. And right here, the price moved above the upper boundary. And exactly at that moment, the price entered our highlighted resistance area on the 1-minute time frame. So therefore, this entry point was pretty ideal in my opinion. So let's return to the 1-minute time frame and observe this pullback. And also I drew three trend lines. In theory, these are the lines from which the price can show some reaction. And now the price is trading within this range. And here we see that there was a small reaction upward after the touch, but the movement still went lower because we had very strong overextension here and we caught it well. And the last seconds of the current position are running out. And as you can see, the trade closed in profit without any problems. A good closing, yeah, in my opinion, and a correctly selected entry point. And if the movement had continued further into overextension, meaning it would show even stronger movement. For example, if the price had moved upward to this area, there would have been another entry point here. And if the price had moved even higher, then the overextension just would have been very strong and we would need to look at the trend more globally. But most likely this wouldn't have happened because on the 5-minute time frame we see the continuation of the downward dynamics after the pullback. And the full such scenario couldn't really happen here, and the entry point was opened absolutely correctly. And as you can see, there was a breakout of the second highlighted trend line. And here we see a touch. The price just reacts and moves upward. And next, I think the price will move lower and touch this moving average and just react again. And afterwards, I think the trend is gonna falling and the price will move downward. So guys, this is how this indicator can be used together with technical analysis, since we did not take additional indicators into account here. So the technical analysis is necessary because you can also combine oscillators when trading with this indicator more precisely. So choose oscillators that confirm the signal at the entry point. So this could be RSI or stochastic, and ADX might also work here. So look at the plus TI and minus TI and their crossover. And ADX will show you how strong the current trend dynamics are. And in general, I think that's all. So one trade will probably be enough. So this is how, guys, you can look at the overextension within a trend and just highlight key areas. Here it is a resistance area, an area where the movement pulled back downward. There was a lot of trading activity. It can also be a support area. So the main thing here is to correctly identify the trend and highlight this area. So after that, you work with the indicator and watch for overextension. And a very important part here is setting up the indicator correctly. So let's go back to the very beginning of the practical part. So as you saw earlier, I first analyzed the overall dynamics across all charts and selected the correct settings. And overall, I didn't make any mistake. So this is the kind of trading we had. So guys, thanks all of you for watching this part. If you still have any questions, be sure to ask them in the comments below this video. So thank you all once again. So here is how envelope works in real trading. So we saw where the price moved outside the boundaries of normal, waited for reactions, and only then made a decision. So that is why the trades started out calm and without guessing. And the main idea is simple. So envelope is not an entry button, it is a context. So it shows when the price is too far from the average and the entry appears only after confirmation. Thank you for watching, guys, and if you want to trade in sessions like this inside a private community with me and my team, you know where to find me. So all the necessary links are in the description under this video. Just send me the message, guys, and see you soon. Bye.